Martin, thank you so much for joining us today. I feel like I kind of have to start on a negative note just because of the way the workforce is reacting in America today. It seems like a lot of employees are maybe unsatisfied, not happy, and you're seeing that reflected in the labor movement and the participation rate with unions. Do you feel like that is, years of the result of years of neglect from corporations, or just inflation and people not having enough money?
I think the relationship between employer and employee has been shifting for many years. And I think over COVID um, and the economic shutdown and the racial reckoning and everything that happened in 2020 just put a spotlight on workers. And we saw that in our polling where worker related issues over 2020, 2021, and now 2022 have become way more important and in terms of like how the public prioritizes this idea of a just company, what issues really matter. So I think those all, that collection of issues has become more important. I think we've seen the importance of people wanting to be treated with respect and dignity and wanting to earn a living wage and wanting to be paid fairly and treated with respect, et cetera. I think all of those things are now way more embedded into expectations, worker expectations. And of course, the last couple of years has also seen worker influence grow as well as a stakeholder, the voice of the worker. So all of those things together, I think, have contributed to what you've just said.
You just mentioned several factors. I guess these are from your recent polling. I looked and I checked out the list, and on number 3, and correct me if I'm wrong in terms of the ranking, was act ethically at the leadership level. Did that climb up the ranking, maybe because of more malfeasance amongst leadership?
No, it's always been towards the top. It's a bit of a table stakes issue. We find, if you don't have leadership that is guided by a moral compass, I don't think any of the other things are possible or make sense. And the truth is, it's very hard to measure, of course, but people expect business and large companies in particular, which is what we poll about, and certainly CEOs of large companies, to act with much greater moral authority. And I think we've seen that play out in how companies speak up and act on social issues. It's very complex. I don't pretend to be, or just doesn't pretend to have all the answers on that. But certainly in terms of what the public expects companies to do, that has always been at or close to the top of all the issues that we track.
And you mentioned these companies. So in this day and age, if we look at it from the employer perspective, inflation, higher input costs, higher wages, and companies having to deal with all of that, all while trying to appease workers. So what do you think is important, or what do you believe is the way out of a recession for a lot of these corporations?
Well, interesting how you position that, sort of an appeasement of workers. I think what we are looking for is value creation for all stakeholders. And that's not, I don't think, some fantasy that's out of reach. You have companies think about what does success look like? What drives our financial success? What drives our competitive success in the marketplace? And then how do we measure those things? And investing in workers, investing in training, investing in good benefits, just jobs, good job creation, investing in the communities where companies are situated. All of those things make for a better company. And so we don't tend to see it as sort of different stakeholders competing. I think business today is all about how do you create value for stakeholders overall, and then how does that drive my company's success? And we saw that over 2020. Companies that went into the COVID lockdown and the reopening that were better at investing in their workers actually did better in the markets. And we're seeing that now with all of our data, all of our indices over the years. Companies that do right by their stakeholders do better financially. So to answer your question, if we're heading into a recession next year, one of the things we can do, I think, to help be more resilient through that and then come out of that stronger is to be investing in our workforce. And the multiplier effect of that, in terms of people being able to have, gross savings, try to build wealth or protect wealth in a recession, only good things come of that. So I think we're seeing a pathway, I think, for better business overall and more resilient companies and ultimately, more successful companies.
But I actually saw an alarming stat, though. 50% of the Russell 1000 employers in the United States aren't actually, or employees, I should say, aren't actually making enough to support their families. So you briefly said living wage. Can you just elaborate on that and, how dire the situation is here in the United States based off of Just Capital's research?
Sure. So point number one is when you poll the public, no matter where we go in the country, who we talk to, regardless of political ideology, Republican, Democrat, all agree that companies, large corporations, should be paying a fair and living wage. So that's something that most Americans agree on, over 80%. Right. Then the question is, how do we at Just Capital and our awesome research team measure whether companies are doing that? How do they actually stack up? So that's one of the things that we do. We were partnered with Revelio Labs. We have made a lot of investment in our analysis of corporate compensation. And we found that, unfortunately, when you look at county by county, which is how you break it down to the local level, obviously different counties have different living wage levels. And then you have to make assumptions about family unit. Is the employee part of a family unit with two working partners and children, or are they single adult? But whichever way you look at it, large numbers of full-time employee Americans are at or below a local living wage level. And so, they rely on government subsidy or food stamps or other kind of support to make ends meet, or they work 2 or 3 jobs. And I think we from our polling, see that that's just not just. It's not right. It doesn't feel like that's how we want to be as an economy. And so investing in our workers begins with paying a fair and living wage. And
Right.
what that does is create huge business benefits, which I've talked about, but ultimately creates a much stronger relationship between employer and employee, much more productive, much more engaged. We've seen that with individual companies like PayPal, who've really focused on this issue. A much more, much stronger business case for investing in workers and pulling them to a local living wage level.
Can you name just some of the top 5 companies for, the best places to work for employees, then, based off of your polling?
Well, we've, over the years, Microsoft, Alphabet, we've seen, I mentioned PayPal, we look at Verizon, very strong, but it doesn't, the companies are in every industry, Bank of America. These are companies that are taking seriously this idea of the stakeholder approach. And we can measure performance quantitatively year on year. I mentioned PayPal because I think it's an important example. And it's a typical story, I think. Dan Schulman, the CEO, conducted a survey of employee financial well-being, expecting, of course, because PayPal is a successful company, expecting great results. Actually, what he found was that there were large numbers of employees who were experiencing acute financial hardship, and that was affecting business performance. It also didn't feel right. So they created a 4-point plan to lift wages, lower the cost of benefits, provide a path to stock ownership, and wrap the whole thing in sort of financial literacy and education. And the totality of that has had a dramatic effect at PayPal and created pathways to wealth creation and addressing employee financial hardship. So we at Just have taken that model, working with PayPal, to create a program for any company that wants to do that, that wants to invest in human capital that way. And we've been joined by Chobani and Chipotle and Prudential and other companies now in that program. So that's a concrete example of something that companies can do. It begins with just knowing how many of your employees are at or below a local living wage level. Just know that, and then you can start to do something about it. But it's not. It's the pathway to do that is I wouldn't say well trodden, but it has been trodden by companies. These things are knowable and doable, and so we're just trying to get more companies to see the benefits of doing that, and help them along the way.
On your website, and I think I've seen in the research, companies should be engaging in a just layoff. Can you just elaborate on what that even means? And keep in mind the examples, like Meta, for example, that's getting sued by shareholders for creating a toxic work environment to increase revenue, and other companies like Activision Blizzard, refraining from giving employees money that are engaging in unionization. So I'm thinking of the word just, and yet these large corporations aren't acting in a just way, right?
Sure. I mean, Meta does not do well in our rankings, partly for that reason. This idea of a just layoff does exist. We saw it during 2020. Airbnb is the best example of that. When we poll the public, they know the economy ebbs and flows. They know that layoffs are part and parcel of a free market economy, but there's a way to do it. And what we found is what people expect is, first of all, the training that companies invest in people so you can transport skills from one company to another between opportunities. Companies can be careful about who they lay off and how they're laid off, the timeline for that to happen, the package that employees get. So there's ways to handle this. I mentioned Airbnb in 2020. Brian Chesky did probably the best example of that. If anybody wants to look it up, it's been widely publicized. It's on our website. And so, I think as we get into 2023 and fears of recession and layoffs loom, again, I just urge companies to really think about how to do that in a just way.